Good turnaround Tuesday, Warriors, in front of Fed Day. So maybe turnaround Tuesdays postponed until tomorrow. How you doing, everybody? Hi, Ingmar. Ryan, buddy, how are you? Steve, Mike. Who else is around? Hi, K-Man, Bran, Blake, AJ, James, Hugo, John. Good morning, everybody. Good evening, depending upon where you're on the globe. Dollars weak. See if Euro could take out that high and clean out the stops over 1830. The whole world is looking for 95 in Dixie. The whole world, everyone I talk to. I've triple confluence at 95. I hear that from everybody. Covered up my Canadas in front of my best trade. Let's see, had some clunkers too. So here we are. Let's start off with K-Man. Switch it up a little bit. Good morning, buddy. How are you?
Morning, everybody.
So uh, Euro's finally kicking into gear.
Yeah,
Does this make you more constructive?
it does for as long as we hold above 117.80.
Okay. This is what
Markets obviously continuing to sell dollars, probably helped by that Miran confirmation. Yeah, we're going into the FOMC with a clear negative dollar bias, and it's confirmed by a lot of currencies these days. If you look across the board, most of the dollar pairs are off. Yeah, dollar yen is a bit of an
Yeah.
exception.
Are you surprised we're not here
No,
instead of here?
no,
Okay.
because the yen crosses are still so big. We've had the confirmation of most of the runners that we expect to enter the LDP. The LDP head election. Most of them are now confirmed. We had a little bit of a correction in the yen pairs when Koizumi and Kato joined in. Kato is going to run Koizumi's election campaign. But yeah, I mean, if you look at the yen crosses, they are still very big. So
Good.
I'd say that if we get a surprise and dovish meeting tomorrow or anything that would support really the dollar, dollar yen is probably one of those pairs that could actually
Rally.
rally a bit faster than other dollar pairs.
Yeah.
That's how I look at it. But yeah, I mean, it has come off with the rest of the dollars as well, but not as much as other dollar pairs. The euro is actually doing pretty well today, even on the cross side. So there's a bit of a demand in behind the euro and on the crosses as well, and it's keeping the euro up nicely right now. Obviously, 118.30 is the next level. With the retail sales
Exactly.
out in a small half hour, we could be in for a decent test there.
Okay.
And then
Uh,
the market will
does,
obviously,
does it mean anything to you that what was leading is
yeah,
kind of in Aussie that is kind
yeah.
of uh go ahead.
I spoke about that on the flow show too. It's one of those typical antipodian things. They front run the whole thing, and then the rest catches up, and they stick around. But it's still positive. Still positive.
Yeah.
As long as we
Right.
are above 66 figure a quarter in the Aussie dollar, it is still positive. We are trying now to confirm a break of a longer term trend line from 2021, which is just around here, really, 60, 65. That would be taking us up to, yeah, into the 67, 68s probably, if confirmed. Yeah, and of the two, Aussie and the Kiwi, the Aussie is still doing it a little bit better, but they're quite running in tandem right now, over the past session or so. So yeah,
So
yeah, they're building in a little bit of a pause. The one that really stood out again as well during your afternoon was that 50 bucks rally on gold again, right?
Yeah,
bit out of the blue. But as I said also on the flow show, it's really over the last 350 bucks, I think. From those 3300s, we saw the
from this
US,
breakout. Yeah,
the
this break.
US, yeah, the US participants stepping in a lot more intensively than they were before, when it was like a lot was down to the Asian sessions. That gold was really big, but now, yeah, for the past 300 bucks, really the US participants are there too. So yesterday again, everybody's calling for 4,000 now. So
Yeah.
I guess anything uber dovish or more weight on US yields is probably going to take it up there.
So I saw a commercial for McDonald's. Blake, maybe you've seen it. They're using and they're promoting it. Gold
Hmm.
salt. Did you see that, buddy? That like that's supposed to be an
I
attraction that that
I
they
did
have
not
gold
see
salt.
that. I
I,
did not see that.
take it for what it is, but I just found it strange.
That is strange.
I
I
wasn't.
don't watch a lot of television, so I haven't seen
Mm.
that, but that's interesting.
I'll wait till
Wasn't
you
Costco already doing that?
Costco. They sell the bullion, the
Oh,
physical.
okay.
McDonald's is like a food chain, so they're talking about that they're using gold salt. Anyway,
That's
anyone else see
interesting.
it out there? It's kind of weird to me. What's that? People think that they could collect, stack it,
I don't
and
know.
no,
The only thing
no,
I've ever consumed that's gold is Goldschlager, which is but
right.
Love that stuff.
that's
Ryan
such
knows
a
it.
late 90s thing to do.
Okay, all right. Well, then I better get a bottle. Um, those were my favorite times. All right, so here we go. Blake he's told you about his plan. Um, we're fading a little bit, Blake, but I know you're looking for, um, sell the fact on the Fed tomorrow in S&Ps. Have we gotten to any numbers as of yesterday that mean anything? 6636 was so far as the high today.
Ye- Yeah, the 6606 was the 161% extension of the move from the 31st of August down to it was that false breakdown that we made on the wedge. That
Oh
one right in
yeah,
the middle of your screen there. Yeah, that
there
was
it is.
that false breakdown of the wedge from
Yeah,
the previous high, which was a couple days before that. So we just surpassed the 161% extension. As I was telling our traders yesterday, these levels, we're in a overshoot. You have to start just looking at round numbers. So like my resistance numbers, if you're looking at like my bias chart, is at 6650, 6700.
yeah,
When you start to get in breakouts or breakdowns where you're past every extension, you really just have to look at round numbers and big figures.
yeah.
So
Okay,
so I
I
think
know
we're in
that.
we're in overshoot territory, which you just got to let it overshoot.
Yeah, okay. Um, Energy's looking good. It's another decent trade. I felt that if we took out last week's high, I think this was after the China threatening Mexico, because Mexico was going to impose tariffs to go along with us for them buying Russian oil, that it would look good back over Friday's high. It's trying. And that gas has made, that correction was a little more than 50%, and here we are challenging this. Looks like 330 is the next thing. So it's energy is pretty unloved. That was one of the reasons. So we'll see. We'll talk about how about talking about yields, guys? You know, a lot of people, I was looking for 410, 4%. It almost looks like we're bottoming here. I'm not saying we can't get another shot down here, but it doesn't look like we're going to collapse. I don't think we're going to collapse on the Fed and go to like 370. anything like that, maybe a retest of these lows, but this could be a fly in the ointment because and we've had guests. Uh, what's Dale's last name that we bring on, Blake? I remember I have
Uh,
decent Briscoe. I have decent
Briscoe. Yeah.
recall of people that I talked to, and he was looking for one more low. And there are a lot of people saying that from here, we're going to see a big rally, that this completes something. And Greg is saying the same thing, that it's completing a triangle. If that's true, that implies, that we're heading back up to the top of the range. I don't know how a lot of markets are going to react to it. I would think it would be a depressant on markets, but we'll see. Let's see what happens tomorrow after the Fed. But I think this is somewhat important, and then you have TLT. It's as long as we hold the breakout, I don't think you could be short, but it's starting to lose some mo as well too. So we'll see what happens with interest rate futures after the meeting. Looks like to me there's some type of floor around here, and that would support the yen, I believe. Could give us something in the end. Maybe we're going to get another rally to 50 or so. So
I think,
Ryan,
yeah,
go
I think
ahead,
the
buddy.
key for that, mate, is once we get over the Fed and everything, then
Yeah,
the focus is, and the BOJ, which is Friday, the focus will shift back to the yen and this election stuff. So that's probably when
okay.
if you're going to see yen weaken again, depending on what the Fed does, that's going to be a big input.
All right. Well, I said yesterday I was looking for 97 to buy the Dixie, and even though Euro looks good and it makes new highs, when I have a trade like this, there's always something saying, maybe it wasn't such a good idea. And
We're in the same boat, mate. We are
I
in
mean,
the
it
same boat.
it gets to your level you've been waiting for, and then it's there, and you go, I don't know. Anyway, I did it, kind of light into the Fed. Bought it risking the lows of the move, which is I think around 96.30 or so. But there's universal, uh, a unanimous type of call for 95 in the Dixie, and I could see how people are coming up with it. Every time I talk about getting long the dollar before that, I get Dale 95, Dale 95. So we'll see. A lot of people waiting for 95. It's possible
That's when we bid at 95.10.
95.10 is yours. Okay, you're going to
No,
front
I'm
run
saying
everyone.
if everyone's looking for 95, make sure you park $10 ahead of them.
Yeah, at least. So what are you going to do in front of the Fed here today,
Well,
Ryan?
I'm in a similar boat with you with dollar CAD. This is one I was eyeing up as my sort of Fed over after Fed trade. I put it on my trade off play of the day with Michael yesterday to buy it maybe around 137, 20, 35, that double bottom that
Okay.
we've had, and we were above 138 when I put that together,
Yeah.
and now we're 20 pips away. So I'm less inclined to think about that trade this close to the Fed and data today and whatever. And I think that is an important risk parameter for traders. It's okay having your levels where
Yeah.
you'd buy it when it's 100 pips away. But are those levels going to stand up when you've got, particularly this pair, both the Bank of Canada and the Fed dropping? So yeah, I've got less
Okay.
conviction in the tech levels, so I'll wait and see what happens. But otherwise,
Yeah. I know why they call it the loonie. It held because I was selling last week at 850 or so.
yeah,
Okay. And other things, the dollar was weakening in certain areas, but Canada kept holding or grinding up, and then all of a
yeah,
sudden it let go, I think Friday. Um,
it
you
started.
know,
Yeah, it went.
it's like a delayed reaction market. Goes further in both directions. A lot of things failed at halfway back, 61.8 back. This one 78.6.
Yeah,
So, um,
it's
the
been that.
Canada, go ahead.
I was going to say it's been like that for the dollar all last week. I came into last week with all the data that we got, and even before that with the NFPs and stuff, saying I want to be short bucks into the FOMC. And it's, I was in dollar yen and it wasn't looking the greatest. We went up to 148, down to 147, up to 148, down to 147.
Yeah.
And it's only really today it's looking like we're having this last hurrah of dollar selling, perhaps. So I think there is a potentially growing risk that if the market gets what it wants from the Fed, maybe that's the end of dollar selling in this phase.
Okay.
And
What does the market want? Are they going to be happy with a quarter and then a more reserved presser that doesn't guarantee all the cuts that the market's already beginning to price in?
I think that for once the market isn't going too extreme dovish on this one.
Okay.
We're looking for, including September, we're looking for 2 or 3 cuts. The difference between 2 or 3 doesn't matter. And then we're looking for maybe 2 or 3 next year. Again, whether it's 2 or 3 doesn't really matter. 3% is the level. That's where it's looking at. If it gets that, then the market's going to be happy. It's going to say, yeah, right, we were right to price the last couple of weeks that way, and move on. And then we'll get back to, less volatile markets and just trading around the data points. I think the market is pretty in line with where it likes the Fed to be. It's not too dovish. It's not too undovish. That's why my case is that we might see a bit of reversal in the buck after the FOMC. But who knows? We could get data today, retail sales, and that blows all that out the window, just like the jobs data has in the last 2 months.
Look at the Dow chart and then look at the S&P chart. They look like 2 different markets, don't they?
Well, they are.
Yeah.
One's full of all your Mag 7s and your techs and everything, and the other one's full of your bricks and mortars.
Yeah. Okay, and the VIX, talked about it last week that it was putting in a higher low above the August lows and this happening with the melt up. And I mean, look at this candle yesterday, even with the market holding, not giving up gains. Can anyone explain, as people are just buying insurance because it's so cheap and there's a Fed meeting? Why
That'd
is
be my
the
guess.
why is the VIX bouncing?
I mean, hedging's it's inexpensive right now ahead of a big risk event. So I would think that's exactly why.
And we've got big expiries as well coming up. It's end of quarter as well. So isn't that in the mix?
Okay.
Rollovers and expiries and stuff.
Okay. All right. Maybe there's another message, but we'll have to see what happens after tomorrow. Blake, you know what? Wouldn't it be great the day before the Fed if we had someone come in here that used to work there?
Yeah, that would be great. I wish somebody thought about that.
Yeah, wouldn't that be great to have a guy who used to, be at the desk at the Fed to come in and talk to us the day before?
Yeah, Dale's got a great guest coming in today. So Joseph Wang will be here in about 12 minutes. Super excited to have him here. Get his take. It's going to be also really interesting since we confirmed that Stephen Moran is going to be joining the Fed for this meeting, but also Lisa Cook is going to be voting for this meeting as well. The risk, Ryan was trying to, freak everybody out and talk about the big risks of her getting kicked out. And then, the S&P was going to drop 40%, ahead of the FOMC. And he made a big stink about it and it didn't happen. So way to go, Ryan.
I said 39%.
No,
well,
but
she might vote raise rates 2%.
She's gonna put in a full basis point hike just to piss everybody off.
Just for the aggravation she's gone through.
But it'll be interesting because we do have, Stephen Moran, in my opinion, he's going to be he'll vote for 50. I mean, there's only one reason why he is joining the Fed is to try to, alter the consensus view. But it's going to also be interesting with the other two doves. The Kevin, is it Warsh? Is it Kevin Warsh? And then is it
Yeah.
Warsh? Yeah,
Warsh and
Kevin
Hackett.
Warsh and Bowman, right?
Oh,
Those are the two other potential dissenters. Well, that are going to, I'd say they're dissenters. They obviously are going to be voting for a cut
what do you
because
mean? Who's in
Waller,
there? No, not
Waller,
Walsh,
Waller.
is it Waller? Okay, I
Yeah,
knew
yeah.
it's one
I
of the
thought you were talking about
Kevins.
who was going in.
Yeah, but it's going to be really interesting which if those two continue to vote for more than what the consensus view is. So if the Fed cuts rates, 25 basis points, which we all assume that's what's going to happen, will they be voting for 50? And that's going to be really interesting. And I think that's going to be, part of what is moving the markets come
The
tomorrow.
shock will be if they don't.
Yeah, yeah. I mean, that's going to be the other thing because then everybody's going to say, "Wait a second,
Yeah,
we
you
had
put your money where your mouth is. Yeah.
yeah, we had two doves that were extremely dovish last time. They're maybe not so dovish. Maybe we won't get as many cuts as the market hopes going into the end of the year. So there's a lot of moving parts tomorrow, in my opinion, which is going to be really interesting. I also find interesting a few things. Let's just cover. First of all, crude oil's ripping higher on this news that Russia might be forced to start cutting some oil production here. And you can see crude, I mean, it's obviously built a really big base here at $61. If we break above 64.50, because you can see 64.30 is the 618 retracement, we start breaking above that, we're talking about, move back into the upper 60s, I would think. So keep an eye on crude. That might be something that's moving regardless of what is happening with everything else over the next 24 hours or 36 hours rather. Also, we have this big breakout in the euro, and I know you guys were talking about it a little bit earlier, but we just broke what I was looking at as a wedge. Now we're challenging these highs and the previous highs, but also Dale, this is that big trend line which we've questioned, which trend line is the market looking at? Is the market looking at you know, this red one, which that's what's capped us before, right? Or are we looking at this black one, which it would be if you connect all the previous highs, right? So obviously, I'm looking at a potential break if we break above 1830. I mean, that should take us to that 119.50 level, which
Yeah.
for weeks I've been waiting to short it up there, and it's like, will we spike up there? Post FOMC, and especially if the Fed does cut 25 and has a couple of voters like Moran, Bowman, Waller, that pushes us up to, will that be the catalyst that drives us to 120? So I'm really interested to see what the dollar does over the course of the next, like I said, 36 hours. Sterling looks great. That squeeze is continuing. If you guys have not, seen this is everybody's trying to short sterling over the last couple of months, and now it's breaking out to the upside, and everybody's getting squeezed
Yeah.
there.
Yeah, don't be
And
penny wise and pound foolish.
penny wise and pound foolish. There's a reason why that's a saying.
Yeah.
Also the Aussie, I've actually taken my Aussie longs off this morning right into the 70s. I sold it, I think, at 72 this morning. If you want to know, what positions I'm running, you can see I've closed that Aussie out there. Uh, and we're getting
Are you guys
Aussie.
going to stay with your short MEX into the number?
I,
I mean,
I'm
into the Fed?
Yes,
Yes,
sir.
yes.
Okay.
These
Okay.
guys are ballsy. I'm still
They are.
short dollar mex, and I don't think I want to have any dollars going into any dollar positions going into the Fed tomorrow. So I'm just trying to get through this retail sales that comes out in about 6 minutes. So
Oh, okay.
yeah, that's the thing that's gonna alter how I trade this over the next 24 hours. But anyway, yeah, that the dollar mech still looks good. I mean, there's no reason
Yeah.
to cover it. I'm going to cover it just to take profits off the table. But Ryan, you're going to hold it
Yeah, I mean, if I see down at that fib level, what is it, the 1918s?
at the 1820 level. That's where I'm turning around. I'm
18s,
going
yeah.
balls deep long. So just so you know.
Oh well, I'll take some profit there, and then I'll keep the short. No need to give it up.
Yeah, all right. And I know K-Man, you're riding that one, right?
Yeah, I'll
Yeah.
looking at 1818 as well, and probably going to take the best of and then sit back, relax, and enjoy the show.
Michael Weisman, you know who that is, Dale. He's he's in our chat room every
Yeah,
day.
sure.
He commented on my week ahead video, and we were talking about it yesterday in the chat room. Just so everybody can see this, this is this is on my week ahead video trade of one of the trades of the week. That low to that high, that's a 618 retracement. It's also 161% extension of this range.
Yeah.
That comes in at 1818. I've been planning on buying the dollar mechs down there literally for a month and a half. So I'm short right now, but you let me see 1820 and I'm getting long and I'm going to stay long. So it's going to be long for I'm going to be long for like a month. So I've been planning on that trade for a long time. And so we're almost there. So just that's an elongated answer of to your question, Dale. So
Okay.
Can you put your stop below 1740, because that's where I'll potentially look to go long.
1740, never gonna see it, buddy. Never gonna see it.
I
Sorry,
said that
Ryan.
about 1850 when it was trading in the 20s.
Nah, I've always given it that it's always had that chance. I've sat there and said, nah, I've always said that was a risk. So I'm gonna be long, man. I'm gonna be on the other side of your trade. Hey, so speaking of which, we have Joseph Wang. He's gonna be here very shortly.
Yeah.
Um,
Can
we
you
got
promote them?
yeah, I'm not the host, so
I'm not either.
okay. So
All right. Don't worry about it.
yeah, maybe Steve could do that or Ryan, anybody out there. We do have Canadian CPI coming out here in just a few minutes.
I
Canada
made you
just
the host, Dale.
Thank
okay.
you, Steve.
Canada just reached the 88% retracement just now. This has been a really big move, Ryan. I mean, we've seen, I mean, that dollar cat, I mean, that's a hell of a move over the last 24
Yeah,
hours.
it is. Stick it on the daily. We've got the 155 DMAs at 5060 as
The
well.
155
No, the
DMA.
100 and the 55. Come on, son. Get
All
your
right.
language.
Well, first of all, who uses the 55 DMA? You use a 55 EMA. So
No, you don't. No, you
the
don't.
I don't know what the 55 DMA actually represents, but great. As long as you know it's there, then great. That we are past the 50 DMA though, which comes in at 137.65. So we're below that. Yeah. So what are you making of this Canadian move ahead of the CPI today?
Dodgy. Very
Dodgy
dodgy.
at best. Okay.
Yeah.
Um,
Don't touch.
fantastic.
I wouldn't touch this one over this data. We got CPI data, US retails. Yeah, it's going to be. It could be a flip flop.
All right. K-Man, what are you looking at coming into this data today? Both retail sales in Canada.
Retail sales, honestly, for as long as we are turning between 0 and 1%, I'm not sure it's going to move the needle too much. Canadian CPI should be interesting because, one, the mood versus the Canada right now is not positive, and two, we've had that inverse move. I also was thinking that somewhere Canadian dollar should remain on the defensive, but it's actually taking back quite a bit. But it could be back on the oil train. Who knows? If crude goes back above $65, people will perhaps think twice about being a short Canadian dollar. It's still my bias, though. I wouldn't mind buying a 136-ish print on the dollar Canada, somewhere in the 136s.
Okay, 136. We'll be looking at that. Guys, we're less than a minute away, actually less than 20 seconds away, 25 seconds away from retail sales. and Canadian CPI. I got the dollar index to the left, yields, which Dale talked about a little bit earlier, right in the middle here. S&P to the right, coming off these all-time highs just a little bit. So we got retail sales and Canadian CPI. I don't think retail sales are going to be a mover, but we've seen weirder things. So let's see. Here we go. Canadian CPI worse month over month. Dollar spiking up a little bit here. Retail sales better than expected, 0.6%
Yeah, slightly
versus
better.
0.3.
That was what some American banks were expecting, a little better print, but you're talking about 0.7 instead of 0.4, right? It's not. But the Canadian CPI coming in
Wow.
weaker than expected. A little higher, but still below 2%.
Year on year, zero.
I'm
Yeah,
really
if you wanted-
surprised Euro did not take out the 1830 high when it had a chance last night. Anyway, watch it close.
Yeah, but it's like people are stepping in and buying the dip below 118 right now too. So that's another thing. It's people are using that stronger retail sales to sell into, and that's another thing that I would be thinking about. I mean, look at how quickly the euro got scooped up below 118.
Oh yeah, look at that. Yeah.
So I'd be real careful. People look pretty dead set on selling dollars ahead of the Fed. Interesting moves. So is Joseph Wang here? He is.
Yes, yeah.
All right. Well, hey, guys and gals, make sure you all stick around for the next half an hour. We got obviously Joseph Wang, the Fed guy. He's here. Dale couldn't have scheduled it better to have Mr. Wang visiting us ahead of the real critical FOMC this week. I want to thank Ryan and K-Man and Steve for being here today, and Dale, thanks for your guidance as always. And we're going to catch the rest of you all in 45 minutes on the Morning Edge. So, Dale, I want to pass it over to you.
Okay, thank you, Blake. Thank you, Ryan, and thank you, K-Man, for laying it out on the court today. Appreciate it. All right, appreciate you guys. And Joseph Wang, I was saying, wow, wouldn't it be great to have someone here the day before the Fed that used to work on a desk there? And I go, and anyway, I knew you were coming, but it's great to have you back again, Joseph. And okay, let's start with your expectations. I do get your free stuff, and I think the headline was implied that there wasn't going to be the kind of easing that the market's expecting after today. Was it too much, too soon? Was that the headline on it?
Oh, hi. Well, first off, can you guys hear me?
Yeah, got you, buddy.
Okay, perfect. Thanks so much for having me. It's great to be here. And of course, today is just the day before Fed Day. We saw that newly sworn in Governor Myron is there, so we can expect him to kind of try to push some downward pressure on rates. I think tomorrow there's going to be a mark to market with what the Fed is saying and what the market expects. And the market is pricing in a very, very aggressive easing path, and not just this year. So pricing in about 75 basis points of cutting, but pricing in a lot more next year as well. So much so that the market is thinking maybe by the end of December next year, we'll be a little bit below 3% on the Fed funds rate. Now, this is a really, really big disconnect with what the Fed was signaling just a couple months ago in June. In June, the Fed was signaling that, let's say in December next year, we're going to have some cuts, but let's say maybe we stay around 3.5, 3.6 instead. So there's about 75 basis point difference between what the market is pricing and what the Fed signaled in June for where rates would be next December. And the market is pricing this aggressive cuts because it's looking at the employment data and thinking that the Fed is going to just panic and start cutting. So, but if you look at what the data has been saying for the past few months, the market is correct that the labor market has been disappointing. We've all seen the low job prints on the NFP report, but inflation data has also been disappointing. So if you take a step back, you'll see that inflation has basically been stuck at about 3%, basically for the entire year. And honestly, there's no path for it to come down. If you look at inflation swaps in the 1 year segment, it's saying that inflation is going to stay around here just for the next 12 months. So the Fed is at a place where both of its mandates, inflation worsening, employment worsening, but still broadly actually evolving in line with this forecast. So this is not a time where they can afford to go all in on the labor market. That inflation is still constraining. So my expectation tomorrow is, of course, 25 basis points. Everyone knows that. But I think in their dot plot forecast, it's going to be not too different from what we saw in June. And so I think that might prompt the market to be a little bit less dovish in its expectation. So that might be a little bit of a
disappointment for the
yeah,
risk.
I think it'll be a little bit of disappointment for all the trades that have really run on the expectation that the Fed would just be cutting massively. And I just don't think that makes sense just yet, given that the inflation is not doing well. In the labor market, it's not well, but it hasn't broken yet, right? We're still at 4.3% unemployment rate. It's getting worse, but it's not yet broken.
Okay, so that's a contrarian view from what a lot of people are saying. So do you think, and we're already getting inklings with the retail sales, I know everyone's looking continuously every day for, people have targets in the Dixie of 95. Is there a chance that with what you're saying, we could get some type of recovery in the dollar?
I think we should get a bounce to the dollar with with tomorrow. Again, I think it's a counter trend move. I think the broader structure move is still a weaker dollar. But I think the market has just really gone ahead and priced in way more cuts than the Powell Fed is willing to give. Now, in the future, we could have, some kind of Trump Fed, and that at that point in time, I think things would be different. But this week, though, it's still very much the Powell Fed, and we got Governor Cook going back there. So Trump was not able to remove her just yet. So for this week, at least.
So we have a floor at 4% in the 10-year, and can we make a move up?
I think we move up.
Yeah, move up, because a lot of technicians are calling this completed for a triangle, which implies, back up towards the highs. That's probably pretty aggressive. You're middle of the road that, we're not going to see rates collapse, but could the big surprise be that the Fed goes a quarter and 10-year yields start to move up dramatically again?
So the way that I'm looking at this now, so we are in a 3% inflation world. We've been there for the past year. I think we're going to be there for the foreseeable future. If inflation is 3%, it really doesn't make any sense to be buying the 10-year at 4%. So I think this is mispriced. I don't think so. The way that I think about this is that it's not so much about whether or not the Fed is cutting when it shouldn't be. It's the path of policy that it's going to project, and it's going to project a more hawkish policy than what the market is pricing in, and I think that will put upward pressure on the 10-year.
Okay. Gold. You were long gold a long time ago, Joseph.
Yeah, I've been massively long gold. It's been a great trade. I have lightened up significantly on that. I think that, again, just thinking that what will happen tomorrow, we could have a small pullback, and if we do, I would buy that dip. Yeah.
All right, maybe back to prior highs. That'd be a natural 3,500. Get $100.
I'd love that. If that would happen, I would buy more.
Okay. And let's get to the S&Ps now. So I know, I also, Joseph, sometimes I watch your weekly stuff, on YouTube. And I know you were talking about the early stages of a mania in AI. And, it's been, even that semis have been bifurcated. You have Broadcom higher, but we haven't seen a new high in NVIDIA for about 2 months. Is that still your bias, that we're in the early stages of people starting to recognize the bubble in AI?
So we're definitely in a bubble in AI. I think there's no doubt about it. Everyone who is in this sphere also will tell you that, yes, there's a bubble, but what people differ on is just where are we in this bubble? I mean, if you're bullish, you would say that we were in the early stages. I was listening to this guy on Bloomberg this morning. He was actually, a big tech guy, and he's like, "Yeah, we're definitely in a bubble, but maybe this could go on for 5 years." So
Yeah.
I don't know. I don't know where we are, but I do think that we are in a bubble, and I think that when you're in this kind of state, it's an emotional thing, right? So, it can go higher than you can ever believe, like in the
Yeah.
tech bubble and the dot-com bubble. No
Yeah.
high was too high. But it's all psychological. There isn't any metrics or anything like that to look to. So I think I just don't know where we are. And then I think it's becoming clear to me that this AI stuff, it's not, progress is stalling, and those companies don't really have a path for profitability, at least with the current economics. But people still buy that stuff, so I don't know.
Okay. Yeah, it's been a pretty tough environment selling rallies here. I know I've tried it a few times. You could tell you're the wrong way when you have to really sweat for 10 handles in the S&Ps.
Oh,
And,
absolutely. I feel that
yeah,
pain.
yeah, and then it rallies 30 in a heartbeat. So, but if someone came to you, Joseph, said, I have 100 grand in cash, um, how would you deploy it? And would you keep it in cash until, people think it's illegal to not rotate into another sector? Is it okay? Is cash okay at this point in time that are they ever going to start thinking about the return of capital instead of ROI, return on capital?
I mean, this all depends on your horizon and your risk tolerance, but I mean, I
Yeah.
would just put it in gold, because I think that
Okay.
we have a lot of things happening in the world, that this
Yeah.
is a real sustainable trend. And I would expect, one day, I don't know when, hopefully sooner than later, the bubble deflates. I think that would actually be, initially, I think that would actually be risk off for gold, because
Yeah.
I'm observing that gold, silver, Nasdaq, they're all moving the same tune. So,
Yeah.
I'm worried that there's a lot of people who just kind of
It,
are just
it,
levered in on this trade. And so if the stock market were to tank, I'm afraid that they would also have to liquidate their gold. So there could be that happening. But eventually, though, should the stock market falter, we're probably going to go into a recession, and I think that will prompt more rate cuts, and that would be positive for gold. So
okay.
eventually, I would expect gold and the equity markets to diverge. Although right now, just looking at the price action the past few
Yeah.
weeks,
Few
it's like I say,
years.
people.
I mean, really, you could go back years. They both have rallied together. Gold has
No,
not been,
no. Well, listen,
yeah,
look at April. Look at April, right? Gold did fine in April, really well, but the equities not so much.
yeah, gold came off like you were saying in April. It wasn't much, that's for
Yeah,
sure. Okay, so 100 grand is in gold, and
yeah.
you just all right, nothing, and short the dollar.
Well, that's the same thing, right? You're
Yeah,
implicitly short the dollar.
and looking for shorts in the market to try and catch what might happen.
It's been painful. I have to confess, it's been painful.
Yeah, I know. Um, I feel it because I've gone through some. So I really would. What about people that are saying the bonds have entered a bull market? We, had this big breakout last week. This was a comeback of the century. What drove this? This was the day of the rout in the gilts because of a cabinet reshuffle. And this was the first day we came in. By the end of the week, we were here, and we've gapped out of this triangle. What do you say to bond bulls right now, or
Well, bond
bears?
bulls have been doing very well the past
Yeah.
past week, right? I think it's recession trade. So we had,
Okay.
I mean, if you look at the job growth, it's been
Okay.
not good, right? So people are
Right.
thinking we're in a recession, so they're buying bonds. But at the end
Okay.
of the day, uh, we are in a world where inflation is 3% and will be probably going forward. That the current pricing in bonds don't make sense in a 3% inflation world, to me at least.
Okay. Uh, you know, energy is starting to come to life a little bit here, Joseph. And I know sometimes you buy commodity stocks in, other countries to take advantage of
Yeah.
dollar declines. Are you doing anything in the energy patch?
Yeah, I own some of the, so part of my,
USO?
for, no, for income, I own things like
Oh,
PBR, or I
okay.
believe it, or the one in EC, I believe it's the Colombian oil company. They just have, I mean, they're get some commodity exposure, get good yield, and
Yeah.
they're also in some country diversification as well. So
Okay. And anything new as far as what your offerings are?
no,
Just,
no, just
it's still teaching the central banking 101?
yeah. I'm actually going to write a new addition to that since it's been 5 years. I'm going to update it with what's happened the past few years, add some new material and all that. Hopefully, it'll come out sometime early next year.
Okay. Um, Biggest conviction trade is obviously gold, buy breaks in gold, and that's really the only market you're interested in being long.
I think that's what I think. I
Okay.
feel most strongly of. Again, I think that we're going to get a pullback because we should get a pullback. We have the Fed coming. I think that, but like I said, I personally would buy that dip.
Okay. So I encourage people to follow you and get a feel for what Joseph does with you could get some free
So Dale, tell
sign up.
me, what do you think about gold?
It's a roaring bull, but I agree with you that it's going to come off with risk. I think a lot of people look at it as a risk off trade, but
Yeah.
I think we'll get a pullback. I think we could have pullback in silver too.
Yeah.
So and I think that the whole world is looking for 95 in the Dixie. And when everyone's looking for one thing, I actually bought the dollar today. I don't know what it's good for, but it could be a surprise, and we could get a rally back to 102 and then collapse again. So that would play into the narrative of a pretty good correction in the stock market if we had a dollar rally from 500 points from here.
Yeah, that'd be a big surprise, I think, for the market.
And I'd be looking for reasons to get short bonds for new lows. I don't have
Yeah.
any yet. So that's where I'm at. Do you want to open an account with me or get into my hedge fund? I know you're self-directed. I would definitely jump into yours, but Joseph, I really appreciate all the time that you come in here for how long you've been coming in, and you're always transparent about when things are difficult. And I really like your stance here because you're definitely a contrarian voice right now in front of the Fed, and it's great for people in the financial realm to have balance and keep an open mind and look at both sides of the argument. And I agree with you, so we both should be nervous.
Oh no. All right. Well, we'll find out soon.
But I want to thank you for coming in and edifying our community every quarter. So, Joseph, I always look forward to talking to you.
Thanks, Dale. My pleasure.
So subscribe, everyone, and follow Joseph on his YouTube channel. He does a great weekly update as well every Saturday. And why not, when you want to know about the Fed, listen to someone who spent some time there and was willing to not just sit back and collect a nice guaranteed salary, but struck out into his own to speculate and teach. So lots of respect, Joseph. Thank you, buddy.
Thanks, Dale.
All right. So wrapped up a little early, guys, but have a good turnaround Tuesday. We'll see you tomorrow for uh, the big kahuna. Well, Moses will come down from the mountain tomorrow, and we'll check it out and be careful with risk. Um, You know, pay attention to what Joseph says, and I think it's reasonable. So remember, most of all, though, don't just count your pips, count your blessings, trade safely. There's no law that you have to be in the market before the Fed or the presser. You could always just wait for the dust to settle and react to the reaction. And everyone have a great day. Adios. You're very welcome. People are thanking you, Joseph. So great interview. Big A tomorrow, Will. Okay. I'll see you guys tomorrow. Join the team in 25 minutes on the morning edge. Adios.